everybody's going to be recorded. And let me go ahead and share us out, and then that way we can address our technical difficulties.
Brian, I hope you didn't have too many problems getting in this morning.
No, well, I stayed home. So, I'm in a spare room. That's why it looks strangely plain. Yeah, I didn't want to risk driving to the office and not making it. So. Yeah.
That's great. Well, someone I know from the Veterans Commission couldn't make it today, but she told me she gave a referral to a client to you.
She did, and we're meeting tomorrow.
Oh, yay. So great.
Yeah, it's been fantastic. We've gotten several referrals from the Veterans Commission. It's worked out well.
Oh, yay. Well, I'm happy to hear that. Okay, Donna Lisa, do you want to kind of explain maybe for those that were on Facebook or others that we had glitch this morning?
Sure. So good morning, everyone. My name is Donna Lisa Stinyard, and I'm the program director here with the Center for Women Entrepreneurs. And first off, let me just say welcome to our first event of 2021, and then follow that by saying we apologize for the technical difficulties that we've had in joining, getting logged in earlier, and trying to do that. We are going to make some adjustments for next month. We just had some confusion between Zoom and Eventbrite and the time start. So we will work out the kinks and get that situated for next month. So we apologize for those that tried to log in early and have the opportunity to network, but I believe we are going to hang around after for those of you that are able to do that and set that up for you so that you do have an opportunity to be able to network.
Great. Thank you, Donna Lisa, because we definitely want to give everybody the opportunity to network. And if you can't stay today, we'll make sure for the next month that we have that, and hopefully everything goes smoothly then, because I know networking is such an important part of this. So it is just about 8, so we will go ahead and get started. So good morning and welcome, everyone. I'm so sorry if you had any trouble logging in this morning. My name is Tracy Irby, and I am the director for TWU, Center for Women Entrepreneurs. I'm really excited about our program today and all of you that were able to join us. So those who are not familiar with the Center for Women Entrepreneurs, we were funded in 2015, just by the state legislature, just to help promote women in business anywhere in the state of Texas. And we do that through small business advising, funding, training, and networking events. The Center for Women Entrepreneurs is part of the Jane Nelson Institute for Women's Leadership. The Jane Nelson Institute is dedicated to preparing women to take on successful roles in business and public service to ensure women have the education to establish careers as successful C-suite executives, the skills for building entrepreneurial businesses, and the framework needed to run for public office. So again, I'm so happy to see everybody here today. Welcome to 2021 and our first WomenRISE. I'm excited about our speaker today. Today we have with us Brian Silver. Brian is the owner of Silver Accounting Group LLC, a full-service CPA firm located in the Houston area and serving clients nationwide. His prior experience included a number of leadership roles in industry. Brian loves helping small business owners and individuals navigate the challenges of the ever-changing tax and business operating environment. 2020 was a difficult year for small businesses. How will the grants, loans, PPP you received help your business? And Brian is going to answer those questions for us today. And then if anybody has questions, you can send those to Donna Lisa Stinyard, and we'll have those at the end. So Brian, welcome. We're so happy to have you here this morning.
Thank you, Tracy. I'm happy to be here. Excited to be back and appreciate the opportunity to speak to the group. So let me show my slides here, get those sharing. All right, is everybody seeing the slides? Okay. All right, so as Tracy said, I'm a Silver Accounting Group. We are a full service CPA firm in the Houston area, but serving clients all over. So we do bookkeeping, payroll, individual business tax, form small businesses for people, kind of the full scope of services that people may need. Let's see if I can change slides here. There we go. So to start off, just the standard disclaimer for a CPA presentation. So it's intended to be general information and should not be relied upon solely without further review by your advisors in coordination with you for your situation. So today's topics, so we wanted to step through a few different things. It's January, so it is tax time, starting to get ready for busy season at our firm and all the others. So we wanted to go through kind of getting ready for your first business tax filings. I know there were over 800,000 small businesses formed in the United States last year, even though there was COVID in place and all the different challenges. And in Texas, there was a large number. I know at our firm, we helped people form quite a large number of small businesses. So for many people, it's their first year of filing taxes for their business. And so that can present a new and exciting world to them that they had not maybe thought about. And then we can go through a few challenges specific to 2020, and then some lessons learned from helping small businesses get started. And then if we have time, I have a few extra slides about the EIDL and the PPP updates and things, and we can cover that and certainly answer any questions that we have. So I'll try to get to those slides as well. So just getting ready with your first round of taxes. These are I base this on questions we get from people all the time. Either we helped form their business or they come in and find out that they need to file taxes. So, you know, the first place to start is to look at your formation documents for your entity and your EIN letter. So a lot of people do not keep the EIN letter, but we found that to be very important, and we try to keep that on file for all our clients. You also need that for bank account opening many times and other uses. So it's a good idea to keep that letter. It will outline what type of tax forms they're expecting to receive from you, and then you know how you should go about that. So the entity types kind of start from least complex to most. You know, the sole proprietors or DBAs or just a standard LLC. That would be called a disregarded entity. Those get filed just on your personal return on a Schedule C. So that's the most basic, where it captures your revenue, your expenses, and just flows through to your personal return. Partnerships, so same type of structure, but more than one owner, get their own tax form, a Form 1065. It does not pay taxes on its own. Again, it's what's called a pass-through entity. So the individual owners pay taxes on their personal tax return, the 1040, but the partnership itself does have to file a 1065. And then there's an S Corp. I know at our firm, we form a lot of S Corps because there's a lot of tax advantages with that, especially for certain size entities. And they have to file an 1120S. So that one, again, is its own tax return to show how the business did, separate from the person. But then each owner does pay the taxes on their personal return. So similar to a partnership, just a different form, but has some different tax advantages. And then finally, the C Corp is the most complex. This would be where you have the double taxation people talk about with corporations. And so the company itself does pay taxes, and then the owners or anybody that receives dividends from that company also pays taxes. So that's where you get into the double taxation that people talk about. So we rarely deal with C Corps in the small businesses. That's typically your much larger companies and even into the publicly traded. So then at the state level, what surprises a lot of our business owners, especially since we are in Texas, is that there is a Texas tax on businesses. So we don't have income tax on individuals in Texas, but we do on businesses. So it is called the Texas franchise tax. You do have to file every year. If you make less than $1.1 million in your business, about 1.1 million, you will not owe any tax, but you do have to file a zero tax due return, or else you get fines and penalties for that. So we do that along with people's federal return when we do it, but the deadline is a little bit different. You will get letters from the comptroller that gives you your tax filing number, also called an XT number, which makes it easy to file. We've got small business owners that do it on their own because it is a fairly simple return if you don't make over the 1.1 million threshold, or we do it for them. So, but the important thing is to keep it going, because if you don't do your franchise taxes, your company, your entity in Texas can go into what's called forfeited status. And technically you can lose it and you shouldn't be operating. So it's a pretty simple process to do. The fines are not that extensive if you miss it, so it's easy to get cleaned up, but it is very important. We get a lot of business owners that don't even know about it or don't know that their business was forfeited until they show up to a bank and want to get a loan. And then they find out that they can't. So, or some situation like that. So I definitely encourage people to look at those comptroller letters and make sure you stay on top of your franchise tax. And then this was not supposed to be an exhaustive list. We have a lot of businesses that have specific tax situations where they have sales, the alcohol and tobacco taxes, hotel occupancy tax. So we have a few clients that rent out condos on the beach or on the lake, and that is their business through Airbnb and different things, and they have to pay the hotel occupancy tax. So there may be other tax situations that are specific to your business and industry that you have to stay on top of, but the big annual ones would be the federal and the state. So then the next question we get asked is, what do I need? Basically, we need everything. So we need books and records of how you did your revenue and expenses. We have clients that do Excel spreadsheets. We have people that still do boxes of receipts. We have, hand scribbled notepads of data, all the way up to people that use QuickBooks and have us do the bookkeeping for them. Also keep track of any loan documents, receipts and contracts for large purchases and leases, your payroll records, any COVID relief documents specific to 2020 and 2021. So your PPP, your EIDL advances, the employee retention tax credit, information that would be done with your payroll. Any of those things will be important to have on hand as things evolve and change. And then any other tax letters or forms you have, such as any of the Form 1099s and any estimated payments you may have made. And I put at the bottom, most importantly, an open communication with your CPA firm. So, we can't read people's minds, so we don't know you bought a truck or some piece of equipment. So you have to tell us, and I, encourage clients to tell us everything, tell us more than you think we need to know, so that we can take advantage of everything possible where we can. So, if we don't know about something, then we can't include it and take the most advantage of it we can. And then some other reminders that have come up recently. Since we're in January, it is the month for annual payroll filings. So make sure you get your Form 1099s for any contractors filed by January 31st. So there is a new form, the 1099 NEC, that is non-employee compensation, that has to be filed for anybody that you paid as a contractor over $600 in 2020. So make sure to get those filed. I know we're in the midst of collecting the data and filing that for all of our clients now. We have seen an increase in Form 1099-Ks received to people, especially small businesses, and IRS letters related to that, even if they never received a Form 1099-K. I wanted to touch on this because it's caused us to have to do quite a few amendments and the business owners to make some changes. So a 1099-K is for your merchant services. So if you collect credit cards, the company that you use to collect credit card payments has to report the amount of those payments to the IRS on a 1099-K. And this has been in place since, I believe, 2012, but it seems to have picked up just in the last year or two. And what we see, especially with small businesses that started out maybe as just a sole person, is when they signed up for merchant services, they might have used their social security number to sign up for that service. Well, what happens now is that credit card processor is reporting all those sales on your individual social security number to the IRS. And you really want that on your business. So you need to get that changed to your business EIN number. And we would have to do some amendments on the filing side to make sure those are recorded in the right place. So it has thrown off several of our small business clients where they had started out for years using their social security number for their merchant services and just forgot about it. And now they've grown and those forms start getting reported. And it looks like they have a massive amount of income to the IRS on their individual side, on their social security number, whereas we accounted for it on their business return. And so it has caused some headaches. So I would definitely watch for those forms and letters, give it to your preparer, and work with your merchant services to make sure the correct EIN numbers are on those merchant services accounts, because I think there's even more cleanup out there than we've seen. And then finally, let's know the deadlines. We have a lot of people that call, seems like repeatedly, to find out when their taxes are due. It doesn't change too much typically. In 2020, it was a little bit more dynamic, and 2021 might be as well, it sounds like. But usually the partnership and S Corp returns are due March 15th. Personal and C Corp, if you're on a calendar year, would be April 15th. And then Texas franchise tax is May 15th. So I said we usually do that right along with it, but just make sure you kind of know the deadlines so you're not scrambling at the end to find somebody to help get everything filed and done, because that's the worst situation you can be in is trying to rush in the end. So some 2020 tax challenges. So, with the COVID relief, it started back in March with the first CARES Act, and then the rush for PPP funds and EIDL. The latest act that was signed on December 27th went back and changed some of those things. So it impacted people that had gotten the original PPP loans and the forgiveness, the EIDL treatment. And we still don't know in many cases the impacts to the tax forms. So they did start accepting the business tax returns last Friday, but we expect there could be changes. So we did have people that want to go ahead and file in some cases, and they just may have to file amendments later because, even we haven't heard the final guidance on how to account for some of the PPP funds, whether you got forgiven or not. We're waiting on some of that detailed guidance and the forms to support that. And then there's a lot of other things like for anybody that had SBA 7A type loan, you got 6 months of payments made by the CARES Act last year. So they paid principal and interest. We're still waiting on guidance on how to cover that. Was any of that taxable or was it a grant? And it looks like that'll be in the new act for at least 3 months starting in February for those people. So there's a lot of those nuances beyond the headline items of PPP and EIDL that impact quite a number of small businesses. And I expect we'll continue to get the guidance and clarity on how to cover those and how to record those for the 2020 forms. So I would urge patience, but be prepared, have everything together, be ready with all the different things you may have benefited from or needed to use, and just be prepared to share it and learn how that impacts it. The IRS operations have been heavily impacted. So, we are still seeing some of the returns and forms we filed in June and July just now being processed by the IRS. So they are way behind. One agent told me there are 23 million pieces of mail behind. And they have tractor trailers just backed up at their different facilities. They're just shoved full of mail. So, definitely anything that you can get filed electronically, work with someone to file it electronically because they are working from home. But they are way behind, and you may get letters on, fines or, I've gotten some that say intent to levy on some clients that are scary, but it is literally in the storage bins at the IRS waiting to be processed. And so we can call and tell them it's there and kind of put a hold on any action related to those things. So I'm not sure why they're still sending out letters when they know they are tens of millions of pieces of mail behind, but they seem to be. So it has also impacted our ability to call. So for about 3 weeks now, I have not been able to get through on the preparer line, where I can usually call and get straight through to somebody and settle multiple clients, issues at one time, and get right to the back end of the IRS. And that line has been closed since before Christmas. So they are still having massive staffing issues and operational headaches. So, be prepared for that if you have any, complex situations or get any letters that need handling. Then guidance, deadlines, and forms may change. So, in 2020, they did the automatic extension for everybody to push the tax returns out to July. And that was great. And I've heard rumors that they may do that again this year, and certainly adjust those timeframes. So, be prepared and just stay aware of what those deadlines are, whether it's a deadline for filing and payment or just filing in some cases. So, that matters on the any fines or interest that could accrue if you, say that they push the filing deadline, but payment was still due by a certain date. So, just be aware of those things and work with your preparer to make sure you're meeting those deadlines. And then selfishly, I put increased demand on CPA firms on here. So, just be aware, my firm and all the others, we are assisting clients with PPP forgiveness from the first round, with, now PPP round 2 coming through now, as well as the typical yearly stuff of payroll and, tax season starting up, and everything else going on with these different small businesses and the support we can provide. So I would, if you don't have a CPA firm, I would heavily encourage you to start making those connections so that you can be on their radar as well. Because I know we have a list of clients that we're trying to bring on now, so that we don't miss them when the deadlines come up, and they kind of get integrated into our processes with everything going on, so that we can provide the best service. But it is a heavy demand time on firms right now with all the different COVID acts, and we've been asked by a number of banks to help small businesses justify deferrals on loans, and just a lot of random things that are happening this year, where a lot of different institutions are pushing small businesses to get our help, which is great, but it could put an extra crunch on tax time. So if you don't have a relationship with a firm, I would heavily encourage you to start that process now, so that you can be in the pipeline and have that relationship established. So a few lessons learned from small businesses we have helped form in the last several years, and helped the people navigate to be successful. So, understand your business structure. So this goes back to the first slide on, what is your type of business structure and your EIN letters and things. We get a lot of people to walk in and they have an LLC, but they don't know anything beyond that. And so, we have to help them do the research or file power of attorneys with the IRS, so that we can start pulling some of the data to find out, how were they formed and what is their structure and what forms are expected, and the deadlines and things like that, so that we can get them on the right track. So just make sure you understand your business structure. Keep your personal and business finances separate. So this serves many purpose. It makes tax time much easier. It makes, if you ever want to sell your business or bring on a partner, much simpler. If you want to get financing, it makes it all much simpler, or change your entity structure. It also helps protect your liability protection if you have an LLC. So what you don't want to do is operate like you are not a separate entity and sign contracts with your personal name instead of your business name, or commingle your business and personal finances in a way that if something were to happen, somebody could argue you are not operating as a separate entity, and that could cause you to lose your liability protection as an LLC. So you just want to make sure you are operating in a separate way, and getting all those benefits, and also making things simple, right? I encourage our clients to just make things simple, and it's much simpler to keep it all separate and manage it the right way. The third bullet seems to have come across a number of people. So open your mail. I've had a strange number of people that have come into my office this year and threw letters down from the comptroller and the IRS that had never been opened. And I sat there and opened them and helped read them their mail. I promise you, any letter you get, the thing, whatever it says, doesn't get better. So, if you open it, it's not always bad news. Open it, understand it, share it with somebody if you don't know what you need to do. But don't just sit on it and hope it goes away, because the comptroller and the IRS don't go away. So it doesn't age well with time. So open your mail, understand it, and get through it. So we have a lot of the new business owners seem to be intimidated by what they get in the mail and don't want to deal with it. So it doesn't get better. So and then file your tax forms even if you can't pay immediately. So we saw this a lot this last year with 2020. So whether it be the payroll taxes, which in the end could be part of that could be deferred on purpose, or people that just had to make choices, right, on estimated tax payments, or even just on their annual tax filings when we got down to it for the 2019 year, when they were filing 2019 and 2020 with the July or the extended deadlines. There are two sets of penalties that a lot of people don't realize. So there's the failure to file penalties that add up, and then there's the failure to pay. So, I encourage everybody, even if you can't pay for some reason, go ahead and file, because that is two separate buckets of problems that you will have. And if you go ahead and file, then at least you alleviate that problem. And after that, there are, payment plans and different things depending on, if it's the IRS or the state, that you can take advantage of. But if you don't file, you can't even get those. And the fines can add up. So say you're a partnership with two partners. If you don't file, that's $195 a month per partner, up to 12 months. So, of payments. So, you're talking about a great deal of money, several $1,000s just for not filing the form. Even if you didn't pay, that's just for not filing. So, make sure you file the forms and then work on payment in a separate way is what I tell a lot of struggling businesses. So we had a lot of restaurants, some daycare operators, gyms, things like that were clients. And, they made the active choice to go ahead and file and either pay what they could or just wait on paying and try to get on a payment plan and things and deal with that later. So that was just some lessons learned that we've kind of captured at our firm that we try to share with our clients. We build upon that, a much longer list in some cases, but some of the hot topics lately that I think have been relevant. Let's see. So since I think we have a little bit of time and talk a little bit about the PPP and the EIDL changes from the Consolidated Appropriations Act 2021 that was signed on December 27th. So the SBA was required to provide guidance within 10 days. They did that now. So I put these slides together on the day it was due. But they have provided that guidance, and the banks are going through it at this time to try to see how they can accept those applications, how they process the first and second round borrowers of PPP funds, and how they work through that. So it's a lot for the banks to understand and do, but the initial PPP applications did get published over the weekend. So they are out there for people to look at. It is probably not what the banks will use, similar to the first time around. Most banks took those and made it their own, either an online form or a different mechanism, and possibly with additional information. But the base template is out there on the SBA's website and available. And the Act also modified the CARES programs all the way back from March 2020 and provided some new funding. So let's see what that looked like. So the PPP, the round 2 of PPP, it is an additional $284 billion in new funding. So people that did not get the first round can get it this time as a first-time borrower. And then people that did get the first round have to meet some additional requirements, but can be second-time borrowers in the PPP money. So it is open to community banks and small banks for the first 2 weeks, and then it will expand to the larger banks after that, is the plan. But again, all the banks are trying to figure out how to adopt it. The new requirements for prior PPP recipients. So if you got a loan the first time around, whether it was forgiven or not yet, I know a lot of people haven't gone through the forgiveness process. So whether it's forgiven or not, you can go for the second round. So what you have to demonstrate is you have to show that you had a 25% decline, at least 25% decline in gross revenue for the same quarter across 2020 and 2019. So in many cases, our clients are looking at, quarter two, because that was when the impacts of COVID really tend to hit with the shutdowns and things. So they would look at quarter two in 2020 as compared to quarter two in 2019, and then see if they had at least a 25% decline in gross revenue. So that's the first big test. And what we found is some clients very clearly qualify. So your restaurants, daycares, gyms, very clearly. We have others that think they had a terrible year. And when they look at the numbers, they see they were down, 8%. Or I had one that was 24%, and he was fairly disappointed that he wouldn't be able to qualify. But yeah, so, look at your quarters. I think this is where good bookkeeping and records becomes key, whether you use a firm to do it or do it on your own. You have to make sure that you have those numbers available for the bank, because they are going to ask for proof of what those numbers are in terms of your bookkeeping. And then the SBA on the forgiveness side will also want proof. So the form says they don't have to take it up front, but most banks will. And then they will have to get it during forgiveness. So you don't want to assume you had a big decline, get the loan, and then find out you didn't have enough of a decline to qualify for forgiveness. So I would encourage you to be real sure that you meet the requirement. The next one is that you have used or will use the full amount of your prior PPP funds. I would imagine that is true for most people. Most people that I've spoken with have used their funds and used them the right way to maximize forgiveness. So, and then 300 or fewer employees. For first-time borrowers, that level is 500 or fewer employees, but for second-time borrowers, it is 300 or fewer employees. And then a few other modifications to the PPP program that happened. So, and this applies to the first round. So if you haven't gotten forgiveness yet, this did modify the CARES Act in many cases. So the Simplified Forgiveness for loans less than $150,000. So the SBA had previously put in place a form, a 3508S form for loans less than $50,000. It was very simple. It was 1 to 2 pages, not many numbers, mostly just initials and signatures saying you used it the right way and that you didn't violate the rules of the loan, and then you just turned it into your bank. So the theory is now they will expand that process of simplified forgiveness for loans up to $150,000. Again, the banks are not ready to process that yet since it is a new requirement, but that is the expectation. I don't know if it'll be the same as the 3508S form, but it will probably take a very similar form as that. So it most likely will be a very similar form to that, if not the same form that they'll end up accepting. So for anybody that has not gone through forgiveness, but has a loan less than $150,000, it's very good news, because it's much simpler even than the easy form or and certainly than the most complex version of the form. They've expanded the list of qualified expenses for forgiveness. So first time around, it was, of course, it mostly has to be payroll. 60% of it has to be payroll. And then there was things like rent, utilities that could be included for forgiveness. They have expanded that list. So there are additional things. And I think the most popular one that people seem happy about is for COVID preparedness. So say you had to buy a bunch of plexiglass for your office. I know I did, to put up on the counters and desks and things. That counts now, or masks and gloves and things like that. Those expenses should count for forgiveness. And there's a few other categories as well. Allows the deductions for expenses that were paid for with PPP funds. So this was a hot topic coming into the end of the year because the original law did not clarify if you could also deduct the expenses that were paid for with PPP funds. So, and IRS actually put out a rule saying you cannot. So if you got $50,000 in PPP funds, you could pay that payroll of $50,000, but then you could not deduct that expense on your taxes at the end. So that was going to produce some major swings in revenue for these small businesses and some surprises at tax time. So the new law clarified and overruled the IRS guidance that now we will be able to deduct the expenses even if they were covered with PPP funds. So that was a great clarification because I know it was causing a lot of concern with a lot of our clients and us on how to deal with that and then what that would look like if somebody ended up having a surprisingly good year because they didn't have all the expenses they expected to be able to deduct. So that was a good change. And then finally, the EIDL advance. So for anybody that got the advance during the EIDL process, it was allowed up to $10,000. It was typically calculated at $1,000 per employee up to $10,000. And you got that even if you didn't take the EIDL loan. So if you completed the loan application and checked the box saying you wanted to be considered, then you would typically get that up to $10,000 advance. Previously, if you applied for forgiveness on PPP funds, that advance lowered your PPP forgiveness. So if you got a $50,000 loan and a $10,000 advance, when you applied for forgiveness, you would only get $40,000 forgiven, and you would have to pay back that $10,000 to clear up that PPP loan. It was a lot of surprise for people because originally when they were issued, it was all understood to be grants and not would exclude each other. So it was good they cleared that up. I know it alleviated a lot of pain for some of my really small businesses that got both and then didn't have the funds to pay back that EIDL advance money on the PPP side. So it does not reduce that forgiveness amount now. I think the unknown thing that we're still waiting to understand is for people that already did forgiveness, because I have a number of clients that had already done their forgiveness before this act was passed, is can they go back and get that money back? So can they go and get that EIDL advance money back from that PPP forgiveness process? Or did they just lose out and the people that waited longer benefited from that? I'm assuming there will be a way to get it back, but we have not heard on a direction on that yet. But the good news is at this time, when you apply for forgiveness, it will not be reduced by that EIDL advance amount. So moving on to the EIDL, so the disaster relief loans. So these were the loans that were more like a traditional loan. Most of them were 30-year loans. They were designed to be working capital. They were straight from the SBA, so you applied for it from the SBA website. That was where you could get the advance as well. Those loans have still been available all this time, so they never actually shut down that application process. At one point, they restricted it to certain industries, such as agriculture, but it is back open now, and they have actually refilled the advance funds. So now you can go back in and get the EIDL advance if you did not the first time. And also the law allows that not only can you get it if you didn't the first time up to $10,000, but say you did not get the full 10,000 the first time, you're supposed to be able to go back in and get the additional money up to 10,000 potentially. So if you did it the first time, you got 5,000 because you had 5 employees, you are supposed to be able to go back and apply for some additional grant money up to that total cumulative of $10,000. Not seen the mechanism for that yet. It would be back through the SBA website, but that is what is supposed to be allowed. So we will see how that works, because I don't know if you haven't hired anybody, how can you justify getting more? So we'll have to see what that process looks like to get up to that $10,000 total if you only got a part of it the first time. But if you didn't do it the first time, I would highly encourage you to get on that process. It is straight on the SBA.gov website to do the EIDL application. It's a fairly straightforward application. You will get the advance, and then you will get offered a loan. You do not have to accept the loan to keep the advance. So you can, if you want. They are good interest rates. They're usually 3.75% interest, but they do have a lot of rules on what you can use it for. So you have to be sure you know what you're going to use it for, and make sure you don't go afoul of those rules, because that could be detrimental. But yeah, you should certainly go in and do the application to get the advance if you have not previously. Again, the EIDL advance no longer impacts forgiveness, like we talked about before. And then we have seen that you can increase your EIDL loan amounts. You can request to increase your amounts. So this is a new thing that has popped up for some of our clients that have EIDL loans. So they got the loan the first time around. It was intended to be working capital, is what the loan was for, and typically calculated about 6 months worth of working capital. So the theory was that 6 months has probably gone by, and now you may need more money. So if you log into your EIDL account with the SBA, some people, I think everybody now, should have the ability to request an increase. And what they do is they send you an email asking for some additional information. And we've helped a number of clients fill that additional info out. And some people get it and some don't. So they evaluate each one on a case-by-case basis. And you may be able to increase the amount of your EIDL loans to get some more working capital. But again, just be aware of the required uses of those funds. I know I've had some people that were wanting to get the EIDL funds and use it to refinance another loan because it's a good interest rate and it doesn't require a lot of collateral or personal guarantees, and that is specifically prohibited in the loan documents. So you just want to be sure you're using it for the right reasons, because additionally, in the December 27th act that was signed, there is more money in there for the SBA and other agencies to do audits and reviews of the programs. So I would not be surprised if we see more clients get more questions and ask for more information. And we've already seen on the EIDL side, people have been contacted by lawyers for the SBA and other SBA people that are asking for additional documentation that usually they would ask for up front. But in an effort to get the funds out the door and support the businesses, they just issued the loans, and now they're going back and cleaning up their files, getting everything issued. So don't be surprised if you hear from somebody at the SBA asking for more information. Just make sure you validate they are with the SBA and that you work with them, because some of them are calling from their houses because of where they're working. And I've had 2 clients that called me saying that they were getting scammed by the SBA for information, and ended up it was legitimate in both cases, which was very good, but it did sound very suspicious. So good for them on being suspicious of that. And then a few other updates that happened with the latest act. So it extended and expanded the unemployment benefits. The states can offer additional benefits like they were before. It also specifically took into account what they called the mixed income situations, where people had a W-2 employment and 1099 employment in the same year. Previously, you had to choose which one you wanted your unemployment benefits based on, and now you should be able to combine them together to get increased unemployment benefits based on the combined income you had. So stay tuned with the state for that. And don't forget, unemployment benefits are taxed. So we've had a number of people that took advantage of unemployment that did not realize the unemployment benefits will be taxed. And there is an option to have federal taxes withheld from your unemployment, but it is a fairly low percentage. So some people may still end up surprised at the end of the year, potentially, if they had a good part of the year and then got some unemployment. So they may owe some taxes. The employee retention tax credit is a hot topic. It was modified to be a little more accessible for people. So it's no longer dependent on whether you got the PPP. So previously, if you got the PPP, you could not take advantage of it. Now you can. You have to demonstrate a 20% reduction in revenue to qualify for it. And then you can look at getting some credits on your payroll taxes for some of the wages you paid. So you cannot do it during the same time period as your PPP funds recovering. And it's a fairly, I would call it one of the more complex tax credits to take advantage of, because it does work through payroll and just the qualifications for it and how to calculate the qualified wages and what the credit would be is on the more complicated side of all the different things in the COVID relief. But it's definitely worth asking and investigating if you qualify, because it is a good tax credit if you qualify to take advantage of. But we have not had very many clients that qualify to take advantage of it, because most people, even though you can get it if you use the PPP, the time period the PPP covered for their forgiveness period was too long, and so they didn't have enough left to take advantage of it. So, but it was extended through I believe June of 2021. So it would be potentially useful this year as well. So just keep that in mind. And then another big item that was in the news a lot was full deduction of business meals. So I know I've got a number of restaurant clients that are looking forward to advertising this and trying to leverage this. So previously business meals were reduced to 50% was the amount you could deduct of the business meal expense. And for the next 2 years, so it's set to expire at the end of 2022, and starting at January 1st, 2021, you will be able to deduct 100% of your business meals if it was provided by a restaurant. So again, a lot of our restaurant clients are looking forward to advertising that and trying to encourage businesses to order out or come hold meetings and things like that there. So I think that is the extent of what I had on the presentation. So I've got our office phone number and my direct email address there for anybody that has questions or would like assistance with anything. We are happy to help. We are set up to work fully virtually. We put a smart vault portal in this year for people who can upload documents all year long and get things. So it's been a great advantage to everybody to just be able to put things out there as they have them and not try to save them up in a file and give them to us all at once. So and work virtually. So appreciate the opportunity, and happy to answer questions and things like that.
Great. I think Donna Lisa has quite a few questions for you. So Donna Lisa.
So first off, Brian, we do have, so as the Center for Women Entrepreneurs, we gave out grants. We have quite a few grant winners on here. We've got some of our community that's received grants from the city and stuff like that. So are grants taxable?
In many cases they are. So in many cases they are. So we would have to look at the situation of, the entity that gave it. But in many cases they are taxable to some extent.
Okay. Yeah. So I'm just going to go ahead and go down the list. So the first question was, is the PPP loan considered income? So right now the treatment is that it will be categorized as other income. So it is income because you're receiving money. What we've encouraged people to do is, on your books, you should have recorded a loan, and then that loan paid the expenses. So when it gets forgiven, that the treatment we're doing now, until we get more guidance that would be more specific, is you pay off that loan with income, but categorize it as other income. So it's not sales, it's not commingled with things that would be general revenue. And that way we can do a tax adjustment with your tax return to carve that out. So the PPP forgiveness funds are not taxed, so you won't be taxed on those. So you just want to make sure you have it separated out, but it would be an item of income that we've told people and our bookkeeping clients ourselves that we maintain, we categorize as an other income item with notes of what it was. Okay. And then we have, I think these are probably more personal tax questions. We have one with the new tax cuts and job acts, if you're still able to deduct, like if you're in law enforcement, uniform expenses, cleaning and that kind of stuff.
Typically, those things you can deduct. One of the big changes that hit people with that act is if you are a W-2 employee of any company, including your own. So say you have an S Corp, and that requires you to be a W-2 employee of your own company, you can no longer deduct home office. So only people that do the self-employment would be able to deduct home office. That's the biggest impact we've seen from that Tax Cut and Jobs Act, is that a lot of people got thrown off because you can no longer deduct the home office expenses if you are a W-2 employee of any company, including your own.
Okay. Any word on the deadline for filing being pushed back like it was last year?
We are hoping, certainly my firm is hoping, it was, if hope can make a change, we are doing our best. So no word yet. I wouldn't be surprised at all. I think the rumors are that they will. It'll be up to the next administration. So I think now they're waiting on that administration to get in place and make the changes. So we'll see what they do, but I wouldn't be surprised, and I certainly hope they do push it.
Okay. Carmen, I'm not sure, you may need to pop on just 1 second. She set out to file her 1099 miscellaneous a week ago, and it said if she used PayPal to pay those persons that she didn't need to file. Is that correct?
It can be correct. So usually PayPal would issue the form to the person. So there's various ways to use PayPal and some of those things. So if you're just transferring money, you may still have to, but if you're doing it like between friends, where you can select between friends, then it's not a business transaction. If you were paying them like a business, then you would probably not have to. The other thing you can do, I tell all my clients, just make sure you get a W-9 for everybody, anybody that you want to pay, because then they have to mark what type of entity they are. Because say they are an S Corp or a C Corp, then you don't have to give them a 1099 anyway, right? So just get a W-9 for them and let them fill it out or refuse if they refuse. But there are ways to pay people through PayPal where PayPal themselves will give them the 1099, especially if you use a credit card and things.
Okay, thank you. I appreciate that.
Okay, so keeping things separate. If we work from home, are we allowed to expense utilities like Wi-Fi, heat, etc.?
If you are not a W-2 employee, you can expense a ratio, so a percentage of your utilities. So usually what we have people do is measure your dedicated home office space, so we'll take the square footage of that dedicated home office space, multiply that, figure out the percentage that is of your house, and then use that same percentage to, across your utility bills and things like that are relevant to your business. So, your electric, your internet, things like that. And we'll use that same percentage across all those bills to take advantage of it. But remember, you can't do that if you're a W-2 employee anymore. So.
One of our community has an LLC and they are owner and sole employee with everyone else as a contractor. If I set myself up on payroll, do I also need to pay payroll taxes in addition to other taxes?
Yes, you do have to pay payroll taxes for yourself. So if you're an LLC, it depends on what type of LLC you are. So if you're an S Corp, then you do have to be a W-2 employee. The owner does to a reasonable amount, and then anything above that can be distributions. But then as the W-2 employee, you would have to pay payroll taxes on yourself. And I would highly encourage you to use a payroll service to make that easy. That's what we do for our clients. If you are just a Schedule C business, LLC, that would be a sole proprietor that files on your Schedule C personal taxes, then do not do payroll for yourself because you will be subject to self-employment taxes. And you actually should not do payroll for yourself. So it depends a little bit. Just because you have an LLC, That's not enough to know if you have to do payroll or not. You have to know how you're being taxed as well.
Okay.
We're happy to talk about that offline if they want to talk through the details specific to their situation.
Okay, I think our next couple of questions are in reference to the EIDL.
Okay.
So the one Samantha asked, can you do it without having employees?
You can. You may only get for the advance what we saw the first time around. So the second time could be different once that's available. The first time around, people that did not have employees got $1,000 for their advance amount because they would basically get it for themselves as a sole proprietor. The loan you can still get beyond that advance based on your working capital needs.
Okay. For the EIDL, are they looking at 2019 or 2020 numbers?
2019 is what they looked at the first time around.
If you applied for the first EIDL and funds ran out, can you use the first application or do you have to reapply?
What we've seen is you go into your account, so you do not reapply because you cannot get a second EIDL. What you can do is you can request to increase your first EIDL loan. So either contact the SBA directly, or if you can log into your EIDL account with the SBA, some people have a request an increase button or link in there to where you can request an increase to your existing EIDL loan. But currently, I'm not aware of anybody that has been able to get a second EIDL loan. It would just be requesting an increase to the first one.
Okay. Sarah wants to know loans that do need to be repaid don't count as income, correct?
Correct.
When looking for an accountant, what are some questions a small business should ask when interviewing?
Yeah, so I would look at how in this environment, how do they operate? Are they open to operating in a way that supports you and your business? I would look at what other types of businesses do they help and support, and sizes. Most of ours, we try to focus on the new startups, and our biggest clients have maybe 50 to 75 employees. There's other firms that focus on just the super large clients. So I would try to find one that kind of matches your size. I think also, kind of what is their theory of operating, how do they start out with you and grow from there? Because I know in our case, we pride ourselves on starting with new businesses and very small businesses. And then, we grow our services along with them as their business evolves and changes. So we're not a very set in our processes and fees and things like that. So we really try to work with each one better. So just make sure you know the processes and how they operate and how you're going to interact with them.
Okay. Will the unemployment be considered other income for the business?
Business doesn't get unemployment, so it would be on your personal.
Okay.
Yeah.
How do you know which grants are taxable?
I would look at the grant documents because if it comes from an entity that is a non-governmental entity, usually there would be some tax consequences. If it comes from a governmental entity, then you just have to look at the granting institution and the documents there. So usually on our side, just take some research for each one. So I'm not sure there's a hard and fast rule, but it just takes looking into each one. I mean, even the grants that the federal government gave through the CARES Act and this new one, in some cases, it just takes additional guidance to find out, because there was it's not like everything that comes from the federal government's non-taxable, right? There's no hard and fast rule like that. So I would just say it takes some research and working with the type of grant and where it came from in each case.
Okay. The W-2 employee was someone and a small business for yourself. Can you deduct only for the small business if I don't issue a W-2 to myself?
A W-2, can you deduct? I'm sorry, maybe I missed it.
Yeah, Linda, Arnold, are you here? You want to pop on real quick? Okay, well, we'll move on. Do you have to provide a 1099 for my child who worked for me?
If you paid them over $600, you're supposed to. If you paid them out of the company funds, then you should issue a 1099 to them. If you paid them from your personal funds, so it basically came out of your earnings, then it's a gift from you to your kid.
Jane wants to know, do we need to get W-9s early?
I would get W-9s as early as possible. So we have been collecting, the information for the 2020 1099s now for our clients, but we also tell them to make sure they start getting W-9s really when they engage the contractor. Like, contractors, depending on your industry, you may find them very hard to contact after you've paid them. So we tell people, make sure you get a W-9 completed before you pay them. And if possible, when you engage them, just to make it easy on yourself and them. So yes, early.
Okay. That was yearly, not early.
Oh, you don't have to do it yearly. No, you don't have to do it yearly, but yes, early, not yearly.
Okay.
Always early.
And I know I see I've got like 6 or 7 messages, and I know there are more questions, and I apologize. But last one, if we have a percentage of our business W-2 to a PEO for outsource payroll HR, does this then exclude us from home office deductions?
You are typically with PEOs, you are still a W-2 employee, which would exclude you from home office deduction.
Okay. Yeah.
PEOs get to be a very complex relationship, but typically in the end, you are still a W-2 employee. Yeah.
Okay, great. That was all kinds of great information there. Thank you everyone for attending today. And Brian, thank you for staying on and answering all those questions. Obviously, it's very beneficial to everyone on all these changes. I want to let you guys know everything that we do have coming up, or a few of the things that will be coming up shortly. Next month on February 2nd, WomenRISE, we're going to have Dewana Horn speak on entrepreneur emotional intelligence considerations for the different stages of business. In March, we're going to have Cassina Sheets. She's going to talk about business credit, get funding with your EIN, not your SSN. We're going to have our first quarterly meeting next month. I'm really excited about this. February 25th will be an evening event, and we're going to have Zandra Evans, and she's going to speak about podcasting, and she has some excellent resources. Also, we're going to have a pop-in probably sometime this week, maybe next week, from the SBA. We're going to do a Facebook Live, and they're going to talk about the PPP and new loan program as well. So we don't know the date yet, but they said they could do it really quick. So we will have that coming up as well. And then Donna Lisa, I'm going to turn that over to you. So those that want to stay today for any networking, we'll go ahead and do it after. We're so sorry about the problems early on today. And all you new people, we hope you will join us again. And Brian, thanks again. That was great.
Thank you for having me.
So we also have a quick poll for you to take, if we can do that. And you don't have to answer the networking portion. Did you enjoy it? Because we know we kind of missed out on it, but it'll give us an idea on length of time and whether you prefer to do it before or after, and we'll get things set up. The 2 events that are coming up, or the next 3 events, February WomenRISE and a March WomenRISE will be posted this afternoon. I have to go in there and make some adjustments on time, and then we'll get that taken care of for you.
Donna Lisa, it looks like you have to answer the networking part in order to submit it.
Well, that's okay. If you can just go ahead and answer, it's okay.
But a lot of you were very interested in the networking, so we want your ideas if it's better before or after.
All right, I'll go ahead and end that. And then, so it looks like everyone that's kind of left would like to do some networking. So let me pause the